Everyone, welcome back to Corporate Dakota, the place where we try to make sense of the confusing world of corporate filings. Today we're diving into Adaptimmune Therapeutics, a company that seems to be facing a bit of a rocky road. So what's the main story here? Well, it looks like our friends at Adaptimmune got a bit of a wake-up call from Nasdaq. They were told they might be kicked off the stock market. That sounds pretty serious, right? This filing is a Form 8K, which is basically a report for important events that shareholders need to know about right away. Think of it as a company's emergency broadcast system. The big issue revolves around the rules for staying listed on the Nasdaq capital market. Nasdaq has several requirements to ensure companies are stable and valuable enough for investors. One of the main things Nasdaq looks at is the market value of listed securities, or MVLS. Basically, it's the total value of all the company's stock that's out there. For the Nasdaq capital market, a company needs to keep this value above $35 million. Adaptimmune failed to meet this $35 million minimum for a significant period, 32 days to be exact. This is like a warning light flashing on the dashboard of a car. Nasdaq gave them 180 days to fix this problem, so they have until March 2026 to get their market value needs to be over that $35 million mark for 10 days straight. If they don't manage to do that, well, they could be delisted, which means their stock won't be traded on Nasdaq anymore. That's bad news because it makes it much harder for people to buy and sell their shares. Now, this isn't the first time a company has faced this kind of warning. It's a common situation for companies that are perhaps struggling or going through a tough time. Nasdaq has these rules to protect investors and ensure that only healthy companies are trading. So when a company falls below these standards, they get a notice and a chance to shape up. So what does this mean for Adaptimmune? They are a biopharmaceutical company focused on a type of cancer therapy called immuno-oncology. They are developing therapies to help the immune system fight cancer. Being listed on Nasdaq is important because it gives them access to capital and makes their stock accessible to a wider range of investors. If they get delisted, it could really hurt their ability to raise money for their research and development, which is crucial for a biotech company. Their stock is traded as American Depository Shares, or ADSs, so this warning affects those ADSs directly. The filing mentions that the company also didn't meet other listing standards, like having at least $2.5 million in stockholders' equity or making a certain amount of profit. This indicates that the problem isn't just about their stock price, but potentially about the overall financial health of the company. But here's the really critical part. The company itself says there's no guarantee they'll be able to fix this. That's a pretty stark statement and suggests they are aware of the significant challenges ahead. This filing also includes what they call forward-looking statements. These are basically guesses about the future. They use words like believe, may, and expect to talk about their plans to regain compliance. But here's the thing about these forward-looking statements: they're based on current expectations. And these expectations can change rapidly, especially in the volatile biotech world. The company itself warns that actual results could be very different due to known and unknown risks. They point to their risk factors section in other reports for more details on what could go wrong. So while they express hope about regaining compliance, the company is planting seeds of doubt. The report is dated September 12, 2025. This filing is a direct response to the notice they received on September 11, 2025. And it's signed by Margaret Henry, the corporate secretary. Every official document like this needs an authorized signature. So let's break down what this really means for Adaptimmune. They received a formal warning from Nasdaq because their market value has been too low. They have a deadline to fix it, but the company itself admits there's no certainty they will succeed. This also points to broader financial concerns as they aren't meeting other basic financial health metrics either. From a business perspective, this is a critical juncture for Adaptimmune. Their core business is developing groundbreaking therapies. But if they can't maintain their stock market listing, it impacts everything from investor confidence to their ability to fund ongoing research, which is basically their lifeblood. It's like a talented athlete getting benched due to rule violations. They still have the talent, but they can't compete until the issues are resolved. The fact that they are also missing other key financial benchmarks like stockholders' equity suggests that the problem runs deeper than just a temporary dip in stock price. It could signal that investors are not confident in the company's future prospects or its ability to generate sustainable revenue. It's a double whammy. Now, if you're an investor, you have to ask yourself if Nasdaq delisting risk and the underlying financial weaknesses are already priced into the stock, or if there's more pain to come. The company says they will explore options to regain compliance, but without success guaranteed. The situation is precarious. For a company in a field as competitive and capital intensive as biotech, a Nasdaq delisting could be a significant setback, potentially leading to difficulties in attracting further investment and talent. This is a company that needs to prove to the market that its innovative therapies have a viable path to commercial success and that their financial house is in order. Right now, the focus has to be on improving that market valuation and demonstrating financial stability. Can they turn their scientific potential into market value? That's the million-dollar question. So my take on Adaptimmune's current situation is that they are facing serious challenges. The warning from Nasdaq is a symptom of underlying issues that need urgent attention. While their work in immuno-oncology is important, the financial realities of being a public company mustn't be ignored. They need to execute exceptionally well on their clinical and commercial strategies to regain investor confidence and meet regulatory requirements. The risk of delisting is real and could have a significant negative impact on their operations and future growth. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.